What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about Bitcoin, the cryptocurrency market, and we're also going to tie that into the stock market. This has been a hot topic in the finance world right now on whether or not the United States is going into a recession and whether or not the stock market has further to crash down. Over the years of having this YouTube channel, I've made the argument that the cryptocurrency market, Bitcoin, is tied to the performance of the stock market. The US stock market, including the Dow Jones, S&P 500, and NASDAQ, are all nearing their 4.236 Fibonacci extensions. Here's a friendly reminder to show Bitcoin's performance with the Dow Jones. Bitcoin has never experienced a real stock crash, only flourishing in a bull market. And many of you have seen this chart in here where I've presented every time that the Dow Jones moved up to a new level, Bitcoin would be in a bull market. Whenever a period of consolidation would come in, Bitcoin would be in a bear market. And it's consistently like this. Every time there was a pause out, every time there was a big breakout and a run in the Dow Jones, Bitcoin would go with it, come in and pause. We go into bear market, breakout, bull market, pause. As we all know, bear market, right? But like I mentioned in this post right here, is that they're all nearing their 4.236 Fibonacci extensions. In late 2021, I was screaming that I thought the top of Bitcoin and Ethereum were coming in. And of course, one of the main reasons was we were approaching the 4.236 Fibonacci extension over here on the Bitcoin market cap and over here on the Ethereum market cap. Both of them ended up hitting the 4.236 extensions. And what? Lights out. So we've got all these indexes approaching this 4.236 extension. And no matter where you look right now, you will see the word recession coming up everywhere. Everybody's fearful of recession. We're seeing the housing market cool off. We're seeing the Fed hike interest rates. We're seeing spending slow down, consumer sentiment in the gutter. We have more people Google searching recession than we did during the C19 time period. And even during the great financial crisis, more people are Googling recession right now. And at this time, the Dow Jones is a mere 14% off of its all-time high. Since the bottom of the great financial crisis, it has risen a total of 469%. We're 14% off of the all-time high. We're still up 390% from the lows. Yet in this time period right here, right now, we have more people Google searching recession than we did back here, and more people searching recession than back in here. And I think it's rightfully so that there are. We don't see it happening in the employment data just yet, even though we're starting to see signs that hiring freezes are coming. But we don't see sky-high unemployment. We do see home prices starting to cool off, the housing market starting to cool off. We see inflation, so everybody's worried about spending their money. Everybody's really tight with their money right now. And this downtrend in the market has been going on for nearly 7 months at this point. So a long period of kind of grueling and grinding, it's naturally going to make people start to feel that way over time. But I've actually presented an argument in this channel over the years that the next time we have a recession or an economic issue that's prolonged is that it won't actually be a recession, and that the next one is actually the big one, the D word. The one that we don't want to say and we can't imagine what our lives would actually be like, but an actual depression. And while I don't know if that's what's happening right in here, I wanted to present some of the things happening on this chart right here for the Dow Jones Industrial Average to say, I don't believe we're going into like a prolonged recession that's just going to recover and everything's going to be fine after time. And then we curl our way up and we go set new highs after a couple of years of prolonged, economic pain. But that the scenarios that I see now are that either one, we're starting an actual Great Depression happening in here, or two, we're going to hold the levels that we're at right now, and we're going to go on and set a new all-time high, followed by the Great Depression. I'm not the type of person to spread fear, and I don't know what's going to happen, but I will present the reasons why I see these things, why I don't think it's just a recession next time, but that it is actually a really big one. It's the depression. And again, I know we primarily talk about cryptocurrencies on here, XRP, altcoins, Bitcoin, Ethereum, all that stuff. But we're really focusing on the stock market right now because it's important. We have a tendency to follow along with what it's doing. So we'll try to tie everything back in again later. But first, there's a big reason why worrying about a Great Depression happening, and it's because of how high the Dow Jones Industrial Average has gotten. It's actually gotten here above the 3.618 Fibonacci extension, just shy of the 4.236 Fibonacci extension, based on the fall that happened back during the Great Financial Crisis. If we look at the NASDAQ and we go based on the dot-com bubble burst that happened back in 1999 and 2000, and we can see that it as well has come incredibly close to hitting a 4.236 extension, coming up just shy here by crossing the 3.618, yet not quite hitting it. However, the S&P 500 over here did hit it. So have we already completed it? Well, S&P 500 has, NASDAQ has not, Dow Jones has not. However, for these two, the NASDAQ, it's based off of a 22-year cycle. Here we go over here on the Dow Jones. This is based off 2008 and 9. So this is really only about 12 or 13 years happening in here. But the confluence of these two things happening on different time frames, one of them being 22 years, one of them being 13 years, both of them reaching out to this 4.236 extension, both coming up just a little bit short of actually reaching there, which is something we actually saw similar happen for Ethereum last year, is that it actually got above that 3.618 extension over here, pulled back, and then went off to hit it. And it's the same thing that we saw happen over here for Bitcoin, getting above that 3.618 Fibonacci extension, pulling back, then going off to actually hit it before then turning over and going deep. So the big question still remains, is this thing going to go on and hit it one more time, or is it going to start plunging from where we're at right now and begin going lower? And the Great Depression has actually already begun. I know, I get it. We're using the Great Depression word, but people are probably like, well, no, it's just going to be a recession. We can just dip down one more time and then we're fine. We can start working our way up. It's not a big deal. But again, we've gotten way up here. We've gotten up to these 4.236 extensions nearly. So I'm going to show you how if like we break a little bit lower, I'm going to show you an example of how once that actually happened, that was it. That was the end. Now, one of the things we've looked at from the past has been what happened to the Great Depression back in the 1920s and the 1930s. We had the roaring 20s that took place, followed by 1930 to 1933. I had the big old Great Depression, just big old collapse happening here in the Dow Jones Industrial Average. And this is true to size. So we're on log scale. This is true to size of how this thing ended up playing out. We can go back here and look, see the roaring 20s that took place in here. It popped right there in September of 1929, and the bottom of it came in there in July of 1932 before finally kind of breaking out in 33. But essentially from this moment in time, the Dow Jones Industrial Average rose about 500%, 503%, then collapsing itself all the way back down, losing 89%. Pretty normal stuff over here in crypto, right? But not normal for the stock market. And if we look at that same time period right here of where we're at right now, since the bottom of the Great Financial Crisis, to see how high the Dow Jones has risen, we've risen 467%. So back in the 1920s, the roaring 20s rose just a little bit over 500%, 503 approximately. Right now, we've risen 467. I mean, that's just peanuts below. I mean, if we scoot this thing up to right here, and say, hey, if we go match exact same size of what happened in the 6% away is what we got compared to the height of the bubble from the 1920s. So we're shy, right? But we can also see what happened when that top did come in. It was like the bottom dropped out of the market, right? Kind of an exponential, euphoric blow off top, then lights out. The bottom fell out from underneath of it at that point. We've had more of kind of a rolling over take place here over the course of the last 7 months for the Dow Jones. So, you kind of question, are we in something kind of like this over here right now? Hard to know, but take a look at that. Take a look at that 6% extra that you have right in there, and you kind of measure that out from what would be a full 4.236 extension. Look at that. It gets you to perfectly nail that 4.236 extension if you were going to go ahead and match the exact same height. And we can modify that a little bit too to say, hey, that was actually 503%, 502. It just gets you just right. It gets you right there if you were to match exactly what happened, right? So we haven't quite gotten there just yet, but we've had this pretty decent sized fall happen back in here. So it's still up for debate if there's still like one more euphoric push to happen in here before lights out ends up actually happening. But I wanted to kind of show you guys some other charts too. Like if we take a look over at Ethereum at the end of the 2017-2018 bull run, and we talk about the wave structure that was happening here to go off and finish itself here. And for those who've been around that, when we went through the C19 sell-off back in March of 2020, talking about this being like, your double tap on top of the all-time high, the excessive sell-off that we saw happen here pulled back down into the bear flag, and it was expected that it would V-bottom out of there and go off and set a new all-time high. And that this is common structure for things to happen as you're coming into the late stages of a bubble and to go on and have your final excess and to finish off a 4.236 extension, which we see happening over here for Ethereum. But even in the same phase, right? So we can see all of this kind of occurring here near the 2.618 extension, pulling back below the 1.618 extension. And we look over here to Ethereum and see same thing happening here from around the 2.618 extension, pulling back down below the 1.618 extension. And I'll take these things off of here to show in the bubble structure of what happened is that we have the double tap with the bull flag. You break out, and then you kind of have one final short squeeze and then rapid pull back down into these levels. What do we have? The double tap, the breakout, one final short squeeze, and then the rapid pullback back down into the bull flag. And then what do? We go on and we set one new high, as we have done here for the Dow Jones Industrial Average. And so if you kind of look at this in a wave count and you count it as like Elliott waves happening in here, what do we have? We have 1, 2, 3, and lights out. So what's going on over here in the Dow? We have the double tap for 1, 2, 3, 4, and then there's your fifth wave. That's it, right? So wave count here, we've got what we're looking for to have happen as you go into the actual final ending of these wave counts in here to hit the 4.236 extension and be the end of a run. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. What's the difference between the two? We've got a nice 4.236 extension hit up here. We do not have one happening in here. But what's really interesting too is if you take these two charts and you zoom out on them, and I mean really zoom out on them and take a look at Ethereum and how this was kind of the final ending before it went really deep into a bear market here, pulling all the way back down in here in the 2018 bear market where Ethereum lost 94% of its value. And well, if we zoom out on the Dow Jones Industrial Average to take a peek at what it's been doing too, there are some awful similarities happening in here on how big this massive run has been for the Dow Jones for the last 90 years and these pausing periods that showed up along the way and where these consolidations are taking place at in here. And then these final ending wave structures that are happening in here that we're even showing over here on the Dow Jones Industrial Average what the ending looks like after just massive runs followed by 4.236 extension reach outs along with the wave counts, along with the actual wave behavior with double taps, breakouts, final excess short squeezes, massive plunges back into the bull flags, and then going on for one more wave. That's even what you have happening in here. Double taps, breakouts, final excess short squeeze, massive plunge back into the bull flag, and then here we go for the final waves. So even zooming out on it and looking at it from that perspective, you say to yourself, oh my goodness, this thing even looks like what happens before things get really bad. And you turn over and you head way down and way down. We're talking to like into the 3000s for the Dow Jones. And this is nice and pretty here on log scale, but you take it off log scale and what do you get? A nice bubble pop, which is what you had over here for Ethereum. So structurally, it sure is looking like what happens when you come to the very ending before a big, long bear market starts to set itself in for the United States stock market. And it's my personal belief and my personal guess that this is the next phase of what's coming in the stock market. The big problem in here is that we have not hit a 4.236 extension. And the big guessing game is whether or not are we going to or are we not going to. With Ethereum, we could see that the marking of the actual top that came in here was once you took out that high back there. You took out the high, then Ethereum went back in for a retracement, an ABC retracement back to 702, and then kept on going down. But a big marker here was that we finally set a low below the previous high. The big thing that I talk about on my channel right now is that we haven't done that over here on the US stock market yet, and that it has still held above that level right there, not taking out that low. If we go look at like the parabolic ending for Bitcoin and the parabola and the bubble that was printed for Bitcoin back in 2017, you can see things that happen as you go into your final parabola is that you really just keep setting higher highs and higher lows without taking out these previous tops in here until you finally blow. And then boom, you take them out and you start really kind of working your way down in here. And we can kind of zoom in on that a little bit to see that as these new highs were getting set, and let me zoom out here real quick. This moment in here is like your double tap bull flag, breakout, short squeeze, back test into the bull flag. Then you get your breakouts, right? And then every wave just keeps going higher and higher and more excessive. And here we are with our double tap, bull flag, breakout, back test, and here we go. So once you get into a parabola, you're just not taking out new lows in here until the pop eventually happens. And currently right now, we're still holding that right now with where we've been at so far. And I've brought this up multiple times on my channel. If we took that out, it doesn't look like a parabola anymore. It doesn't look like an excessive bubble being printed anymore, and that the bubble may have already popped. Because in the example that we have where we've done something just like this with double bouncing, breakout, short squeeze, back test into the bull flag, breakout, short squeeze, back test into the bull flag, and you go off, once that got cleared, that was the marker. Every wave that went down beyond this right here, taking that out, showed an ABC fall, another retracement, fall. That was the end of it. And if we look at how even Ethereum ended in here, there was somewhat of a sell-off that took place up in here at the top before it reached its final little push in here, right? And so we know that we're a little bit short in here on the Dow Jones for a 4.236 extension, and we know we're a little bit short over there on the NASDAQ for a 4.236 extension. So there's still just kind of one more push to get you that, and that you can see that when the topping came in, that it wasn't really kind of a longer grind. The bottom just fell out of this thing and it started really plunging, and there were really kind of a few waves before it really let go. And we just haven't really had that happen up in here. You know, we've really had kind of just like this orderly fall happen from up in here. And typically with these types of bubble prints with double tap, bull flag, breakout, back test, V bottom off into new all-time highs, when the top comes in, there's just this excessive sell-off in here. And maybe that's still yet to show itself at this point. If that low gets taken out, well, then, you know, we have the confirmation that we need to say, hey, we're not setting parabolic excessive rises anymore. Things have really slowed down. So what do we have coming this upcoming week, right? We have another Federal Reserve interest rate hike expected to be like a 75 basis point rise, right? A lot of people are worried about that. We're also going into earnings season right now, right? So what would happen if we take out this price level right in here? Well, then we're suddenly not acting parabolic anymore. In addition, right, we take out that high. We also take out the 200-week moving average in here. So you'd lose your 200-week moving average at the exact same time. And people are really expecting like that the Fed's not going to pivot until something breaks, right? So what would happen in the narrative, right? It would be like, boom, something breaks in the market, right? You take out the 200-week moving average, you take out the top in here. Then let's say the Fed pivots, right? What would the expectations of the market be at that time? The expectations would be that the Fed is pivot. We're going to go into quantitative easing again. We're going to return back to the money printers being turned on, and things are going to get real easy out in the market again. And we're going to return back to normal. We're going to go set new all-time highs. But that it wouldn't be the case because this bubble has gotten printed so excessively at this point for years, decades at this point, that no, this is actually the ending in here. So if we actually went and did that some point where, you know, I see it all over the place that people say it's not enough yet, that I think that if we actually took out this level in here, that it would actually be the start of the actual pop of the United States stock market for good, and that a little recession and then we resume back to the bull market like everything is just fine. It just doesn't point to that happening here from a structural standpoint. And that's the thing that I look at, right? We could dissect narratives all we want and do all that kind of stuff all we want. But from the chart perspective, it says that we lose the parabolic bubble rise if we take out that level, and that the best thing that could be hoped for would just be a retracement or return to normal, which would be perfect, right? You get QE turned back on. We're returning to normal. We're going back to all-time highs because the Fed's going to print for forever. But instead, it comes up short, and it's actually the end of it at that point. Otherwise, right, if that doesn't happen, if this level continues to hold in here, then it would seem that the most likely thing that's happening in here is that we're getting kind of the first initial profit take happening in here. And for Ethereum, when that did happen in there, that was a 22% pullback that happened in there, which we have had about that, right? 19% over here for the Dow Jones Industrial Average. Goes on, hits its 4.236 extension, and then wham, you have your price pull back right down into here, and then ABC. And right, this whole process could take a very long time for it to work its way out. But, you know, if you start taking this out in here, then, you know, you start working its way out. So even if we pull back down into here, right, like we did back over here, right? It doesn't necessarily mean that we go down in a straight line into a Great Depression and everything's end game. It just changes the way to look at things that are happening in here. If you look at it from this perspective, I personally do. When I'm looking at the Dow Jones, when I'm looking at the stock market, I'm paying attention to these 4.236 extensions, just like I did for Bitcoin and for Ethereum back in 2021 as they were getting towards the top. I'm paying attention the same way over here to the stock market right now, and I'm paying attention to this level right here to tell me, you know, hey, do I think that the bubble for the stock market has already popped, or is there one more push up in the stock market right now? And how I need to kind of like navigate these things from my own perspective, and especially when I'm talking on this YouTube channel of what I'm thinking. And you guys have heard me say it a whole lot all the time, you know, hey, I'm looking at this level. It's really important that this level happens in here. And I haven't done a whole lot of explaining on that in quite a while, but it really comes back to what happens in parabolas and what happens during final endings as we get near these 4.236 extensions, that if the parabola is continuing for the US stock market and this bubble is to continue, which it unquestionably is a bubble in here, right? That is a bubble happening in there. And if the bubble is to continue rising and rising and rising, well, it shouldn't be taking out these levels. It just shouldn't be. If it starts taking them out, then we're looking at stuff happening like this, like the top of it may have already started to come in here, which means it would have come up short of a 4.236 extension. And we usually see first initial profit takes. We even saw first initial profit takes for Bitcoin back in 2021. We saw it for Ethereum back in 2021. Then it went on and hit its 4.236 extension. So those things are very real, that, you know, these getting above the 3.618, first initial profit take, then you finally go on, you have your final hit happen out here to the 4.236, and then it's lights out, right? And so those things are all still in play right now as this level is still being held in here. But I see a lot of, you know, worry out there, and the economic data out there is bad. I mean, it looks like we're going to have some serious issues coming for the automobile industry. We're already having pull downs happening over there in the housing market. It looks like employment freezes are starting. People are getting really tight with their money. Consumer credit, you know, credit card spending is going up. Savings is going down. We're seeing a lot of negative things happening out there in the economy right now. But does that indicate that the bubble has actually popped, or can there be like a bearish divergence as we saw show up there for like Bitcoin and for Ethereum, where even on these weekly time frames, right, bearish divergences emerged, and it went on and hit that 4.236 extension up here with much weaker volume and a whole lot less strength. So I think all of those economic things that we see happening out there are very real, and that if we got up here, I don't think we're going into like super mega awesome things are going to be great, you know, in the stock market. But whether or not from the technical perspective happening here and what happens with bubble prints, is there the final push up to the 4.236 extension? If there's not, if it starts taking out the low and it starts heading back down, then we may have already seen the actual bubble pop. And just because we take that level out, look what happened in here, right? It goes down, but then what happens? It comes right back up, right? So just because you head down here doesn't mean, sell it all, we're running away. It could be, right? We've seen how these cryptocurrencies have behaved this year. It's been just an absolute nightmare. But in this circumstance right in here, what happens? It just immediately reverses and it goes back into a retrace. But that doesn't mean that just because the prices bounce from there and that we got that final flush that everybody's looking for out there, it doesn't mean we go on to set new all-time highs. The fact that we took out that previous level and we're no longer acting like a parabola anymore would mean it's just looking about retraces happening in here before the next plunge ends up coming. So I figured I owed it to you, the viewer of this channel, to at least see my grand perspective on how I'm viewing these markets. A lot of you have been in with this channel since March of 2020, when we went through this whole time period with the stock market and talking about, hey, look, This is normal to end up happening in here and to go on and set a new all-time high. And we've gotten that. We've pulled back in here. The thing is, we've still held above this level right here, right? We have not taken that out. A parabola is still in play here for the stock market, and it hasn't hit a 4.236 extension. And as we saw, even in the last mega run, the roaring 20s for the Dow Jones Industrial Average went up 503%. We still haven't quite gotten there, and that actually does get you right to the 4.236 extension. So my base case right now watching for this market is that, hey, if this level continues to hold in here, I'm still looking for us to go on and hit a 4.236 extension. At that point, man, I become that big gloom and doom guy, man, that, hey, we've gotten here now. We've hit a 4.236 extension. What typically happens after things like this is the bottom just falls out. So when it comes to cryptocurrencies, right, how do you tie cryptos back into something like this? I tell you the way I imagine it. I don't know. I can't predict the future, but I tell you the way I imagine it. I imagine that cryptos would perform well during a moment of where we're reaching off for the all-time high. But then as this moment starts to come in and we roll over and you have that big plunge that comes in from the stock market, they would not do well during that time period. However, then you go back into a retrace. If we play out like something like that, which this structure has matched the whole way up, then they'd probably perform well during this time period as well. And that this would be short-lived, but it would be pretty crashy. But then as you move back into here, things would do well, but there would be this short-term time frame of where just this big crash happens and cryptos probably get a big hit with them too. What happens? The money printers turn back on, QE turns back on, and we go back into retrace. And during that time, cryptos do well, but still stock market doesn't set a new all-time high. And then of course, another leg comes down. They probably don't do well during that time period either. So I imagine cryptos doing well in here, and then I imagine cryptos doing well in here. And, if you look at it from a time perspective on how long things take to play out in relation to the grind up, right? From a time perspective, this all seems about appropriate for how long this took. You took this long to run up here, then you fall quick, this long to run up here. On this chart, while this wasn't very long, over here, this is years. This is, 2 or 3 years for something like that to play out in here for the U.S. stock market. And that we can guess it's going to play out like the Great Depression, where it's only going to take 3 years. The whole thing's going to plunge 89% and then game over. But, things are different right now, right? We have the Fed, they have QE, they can buy stuff. We have passive investing from people's 401ks. Do those things impact the speed at which it moves down, right? I would think so. But, over the course of the next few years, the moment that would have me really worried about cryptocurrencies would be that moment coming right in there. And so I'd be sitting here, if we got this new all-time high here on the Dow Jones Industrial Average, I'd be building up my cash position pretty strong, preparing that I'm worrying this moment is coming next. Now, what happens if that doesn't end up happening in there, right? And we actually end up doing what most people expect right now. Everybody's searching recession. Everybody's thinking that, the markets are going to break before the Fed will end up reacting. And we actually end up having some move down like this, right? Crypto will probably do poor during that time, right? I mean, that just makes logical sense. Crypto follows the stock market, will probably do poor during that time period. And of course, if it keeps crashing and it is a Great Depression and we're going to lose 89% over the course of the next 3 years, well, God help us all, crypto is probably in big trouble. But if we kind of assess the structure of how we got ourselves to where we got to, the structure would indicate that, it's going to do some retracing before it ends up falling in here. And I would suspect that cryptos would do well during a retracement time period. And that, again, this would still take years to play out in here. So either there's the break coming that everybody is looking for, cryptos take the plunge with it, but I think cryptos will perform well after that, or cryptos can go ahead and start performing well as we start heading off into new all-time highs and 4.236 extensions for the Dow Jones and for the NASDAQ. Because as we saw, the roaring 20s did go a little bit higher than this, and we have come up just a tad bit short in here for a full extension in here. And it is common to see first initial profit takes take place right above the 3.618. So I still view those things in play, but the big deciding factor for me to say, which one do I think is happening? Have we already started the big, multi-decade bear market for the stock market in the United States? That really all kind of gets decided for me on how I start viewing this market. If that level gets taken out in there, if we take out February of 2020, parabola is lost, and we're starting to look like it has already begun. Doesn't mean it's going to keep going in a straight line down. Could just head down and then bounce right back up into a retrace. But this is kind of like how I changed my tune on my views of the US stock market. And I thought I would show you all this stuff to show you why I feel the way I do, why I care about this level so much, because I talk about it a lot, and how I am in the camp that the chickens are coming home to roost soon for the US stock market. But still, I don't think that I see what I need to see to sit there and say, we're going to start doing it now. But I also wanted to show why just talk of like recession. I'm looking at way more than recession happening in here once this thing really gets kicking into high gear for a prolonged period of time. And I know there are many YouTube channels out there who, build their entire thing by driving home gloom and doom and talking about a Great Depression coming. And I've never wanted to be that guy, and I'm not that guy. But I thought I'd show you all these things because this is not the first time I've talked about these. You can see it clearly with your own eyes in here on how this has all behaved for the last 90 years for the Dow Jones, and how in order to maintain a parabola happening in here for a 4.236 extension, one would have to think that level's got to continue holding in here. And if it does, I would imagine positive price action for the cryptocurrency market. But then watch out. If not, if this thing is going to do what most people expect, well, then parabola has been lost. Crypto prices will probably do poorly during that time period. But during a retracement, one would imagine they'd do just fine, and that this would probably take years to play out, as that would be considered the return to normal. QE gets turned on, money printer gets turned on. Everybody thinks we're going to go to new all-time highs. So there you have it, guys. That's what I'm looking at over here on the U.S. stock market, and how when people talk about a depression or people talk about a recession, it's like the most common thing, and it's the most thing that's being searched out there on Google Trends, or at least it's the most recession has been searched for over there on Google Trends. That I don't see a recession as being the next major thing that happens for the U.S. economy and for the U.S. stock market, but that we have now set ourselves up so parabolic that the next one is actually the big D word. But until we actually break the parabolic rise that we've been having in here, and the parabolic rise gets broken, if that level gets taken out, then I still assume that this thing can continue to rise. And, if you look at the economic data that's going to be coming out in the next week or two, it's going to tell us that we've already entered into a recession due to GDP growth, that the US is already in a recession. And maybe we go on and set some new all-time high in the stock market while being in a recession, while inflation is running out of control, and people have this feeling that I have no choice but to buy the stock market because inflation is going to eat me away. And it doesn't even matter if we're in a recession because inflation is so out of control, asset prices continue to rise, and there's nothing I can do about it. I got to buy the top of the stock market, right? Maybe that bearish divergence emerges. Who knows what the narrative could end up being? And then again, if we go ahead and take out the February 20 highs, well, then all of that's put to rest at that point. I think we've already popped the stock market. But it's unquestionably a crazy time out there. It's an interesting time in something that we haven't seen in our lifetimes, at least not me, right? I'm in my mid-30s, living through a moment of extremely high inflation, going into a recession at the exact same time. After all this quantitative easing and money printing and asset purchases, it's just an amazing time to be out there. And I always find it so interesting just to look at the charts to see if they can tell me the actual story that's happening in here. And I found it so amazing to be able to live in these charts and breathe in these charts. And even when we had the C19 sell-off that happened in there, but it made sense. And I had the YouTube channel during that time, and Bitcoin crashed down to like $4,000 at that point. But it was like, nope, we're still going to go up to like 70 grand because the chart tells us that that's what's going to happen. And it did. And it's very amazing to see that's, the structure that we've had play out here for the Dow Jones Industrial Average. And we're kind of just waiting on the story at this point right now. And I'm not in the belief that the next recession is actually just going to be some simple recession, but the next one is the big one. But I'm just sitting back waiting for the story to be told on the charts. But otherwise, I'll go ahead and wrap this thing up. I wanted to give you my global macro view on the US stock market and why I talk about that level being so important from February 2020, what my big view is of the stock market at this time, what I think cryptos would be doing during that time, in that, even though in the Great Depression, it just took 3 years for things to crash all the way down, I don't imagine us playing out in that same manner. Anything could happen, but I just don't imagine it. I imagine it being more of a slower grind down, even though there could be big moments where 40% gets knocked out of the stock market all at once, but then it retraces and then 40% again a few years later. But I don't think we're going to have 3 years of just 89% being wiped out. Always possible, but we'll just have to wait and see how the charts can start telling us more of the story. But that's my view. I wanted to show you the guys those things that may be a wake-up call to a lot of people out there right now who are heavily invested in the stock market. I personally am not super invested in the stock market. I even have my children's college funds. Only 1/3 of their college fund is in equities. So the other 2/3 is like in a cash money market position. But, I'm not telling you that's the right thing to do, but that's what I do. But all right, we'll wrap this thing up. This video is super long. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.